Right, welcome back. Right, so in this video, I'm now going to do an example, right, of what? Of how to correct net profit after errors. So as I said from my previous video, that I'm going to use the same example that I explained, that I used when I was doing suspense and journal entry, which is this example. So please, if you are new, you need to go back to my previous video to check where I was explaining this example, to do this suspense, to do this journal, so that it will be a continuity for you. Right. So what you need to know when you want to correct errors, when you want to correct net profit after some errors, ngoma ndio, the rule is the same. First thing, this is the mother. This is the mother, journal entry. The first thing that you need to do, whether it's being asked or not, even if you see this type of question in paper 1, remember I said you need to ask for a what? For a rough draft. You need to prepare the journal entry first. Do your journal entry before you do your suspense, before you correct your errors. Meaning this part of questions, this part of transaction will become useless now. We are now only concentrating with the journal entry. Once we now have our journal entry, that's where we can now prepare suspense from. That's where we can now do our correction of net profit from. That's where we can also correct the trial balance. We'll be just using our journal entry. So I want to show you, I'm going to wrap this part. Then I want to show you now how you can correct. Remember, the profit that you want to correct is 13,000. So this 13,000 was affected by these errors. So these errors are the one in these journal entries. So this journal entry is summarizing these errors. So it means these transactions, they are of less value. We can wrap them because they are already there. Right. So accounting, guys, is very, very easy, very, very simple. But you need to understand the concept. You need to have the technique. And also, above all, please, you need to be consistent, persistent when it comes to practicing. If you practice today, then you skip a day. Maybe you skip 2 days and practice after 2 days. Trust me, you are not going to grab the concept. Practice each and every day from Monday to Sunday. That's how you can grab the concept, right? So, in exam, there will be a space like this, right? There will be a space like this. So the question was saying, remember I said when you do this type of question, you need to read the question very carefully. Ipapo, please. There might be 2 questions there. First question might be saying the effect, whether undercast or overcast. Number 2, the correction of the effect, like this question was asking the correction of the effect. The correction of the effect, that's when we say add or subtract. Right. So when you do the correction of the effect, you start with the unadjusted net profit. So it was 13,000. What is happening to my markers? It was 13,000. Which one? Right, it was 13,000, right? So now let's use our journal entry and the approach that I was explaining from our previous video, right, of the relationship. One now to link it, right? We now want to link it. Let me rewrite it here. That is net debit item, net credit item, net profit, right? Direct, indirect. Right. So we want to link this with this. So This is our journal entry. Our suspense at it. Journal entry. So what are you going to do? First thing, what you need to understand, we want to correct net profit. Net profit, we get net profit from the income statement. Hence, from the journal entry, select only those entries with aspects that we can get from net profit. As simple as that. Zvinoreva kuti pane any transaction without pane any journal entry without a account that you can get from net profit, from the income statement, it means I do affect. Saka iona kuchinyora to transaction number 1. Woenda kuona journal entry number 1, there is suspense, there is purchase. Suspense do not affect, but purchase is there in the income statement, hence obvious it affects. So what are you going to do now? You check the side of purchase in the journal entry. So purchase is here on credit side. So if purchase are on credit side, it means these purchases were what? Were overstated. If you are new here on this video, please you need to go back where I was explaining how to do this journal entry. If you go back to the original transaction, you're going to see purchases were overstated. So when you see a debit item, let's say you are new, let me re-explain. When you see a debit item in the journal entry, when you see it on credit side, it means it was overstated. But when you see it on debit side, it means it was understated. A debit item, if it's on debit side in the journal entry, it means it was understated. But if it's on opposite side, the credit side, it means what was overstated. Which is same when it comes to credit item. If you see them on the credit side, it means they were understated. But if you see them on the debit side, it means they were overstated. It's simple like that. So these are purchase. They maintain debit side, but they are here on credit. It means they were overstated. So you bring this purchase to our relationship. Purchases are on debit. You come to the debit side. What happened to purchases? They were overstated. So we are saying debit item is overstated, right? It's overstated. Because of indirect relationship, our net profit will do opposite. It will be understated. Understated means kushomesa. So hence, if something's understated, to correct, we add. So you say purchase. So under detail side, you say purchases overstated. So what was the original amount? 300. So you are going to add 300. So to add in accounting, we don't put brackets, we just leave it like this. Watopedza, pana, watopedza, wakutoona mark yangu. Right? Then number 2, right? Number 2 here. Number 2, there is Tina and Tino. If you still remember the original transaction, these were debtors. Hence, you don't record, you just come here, no effect. No effect. This one you must get correct. You must get it. That's marks for Mahala, right? Marks for Mahala. These ones, because it's just a matter of you saying, oh, Tino and debtors, creditors, capital. We don't record in the income statement, so hence no effect. So just say no effect here. No effect. Right? No effect. Number 2, no effect. Right. Then number 3. What happened here? There's discount allowed, there's discount received, suspense. So there are 3 accounts. So please, you deal with each and every account, not as everything as a whole. Each and every account. These are 3 accounts. Discount allowed, discount received, suspense. But suspense, we put it aside because it does not affect net profit. Let's start with discount allowed. Discount allowed is a debit item. It's on debit side. So it means it was understated. Right, so we bring this in our relationship. If discount allowed as an expense, as a debit item is understated, right? It means because of indirect relationship, our net profit will be overstated. So hence, to correct overstated means something which is more. To correct, we subtract. Right, so number 3, you write discount allowed over understated. So the correction we are saying 120. What? 120, subtract 120, so we put in brackets. So we are saying it was understated, net profit will be overstated, hence correction we subtract. I hope we are together. Then discount received. Discount received is an income. It's on credit side, it's on debit side. It means it was overstated. Something on credit that maintain credit side, if it's on debit side, it means it was overstated. So you come it on credit side because this is income discount received. So it's the credit item. So in credit item such as discount received is overstated. Because of direct relationship, net profit will be also overstated. The correction you subtract. So you are saying number 3, discount received. What overstated? What are we going to say? 120 subtract. As simple as this, guys. Right. After that, there is motor van, there is motor repairs. This is number 4. So motor van, it's an asset. It does not affect net profit because we record it in the balance sheet. We want motor repairs here. So motor repairs is an expense. It's on credit side, 1.5. So it means if you see a debit item being recorded on credit side, it means it was overstated. So you come with debit. So debit item motor repairs is overstated. Because of indirect relationship, net profit will be understated. The correction we add. So motor repairs are overstated, right? So what are we going to say? We add 1.5, right? Then after that, number 4, we are done. Let's go on number 5. Number 5, there is creditor, there is bank. So it means we don't record the creditor, we don't record the bank in the income statement. Both of these accounts, they don't affect. So we just write number 5, no effect, no effect. Right, so at the end here, we just say 13,000 plus 300 minus 120 minus 120 plus 1.5. Then you get the correct answer. Let me take my calculator. Right. So we are saying, where is my calculator? So we are saying 13,000 plus 300 minus 120 minus 120 plus 1.5. So it means the corrected net profit will be 14,560. So this one is called corrected net profit. So please, this one you must get this mark. These are free marks. This one, no effect. The transaction that you write no effect are those transactions with the journal entries. Are those transactions with the journal entries that do not have accounts that will be recorded in the income statement. Like this creditor bank, Tina. Those are debtors, we don't record them here. So this is how you correct the net profit after errors. So I hope I did justice to this topic from what is trial balance up until how to correct errors. If you have any question, please, you must be free to ask me, right? Don't say, because we are not paying, is it possible for... The reason why I'm doing this is to help you. So if you are shy saying because of you are not paying, is it possible for me to ask when you are missing the opportunity? This is your opportunity. I want you to shine in these coming final exams. I want you to shine in the next coming exams. So please ask me, be free to ask any question if you missed something. And please, before you ask, because I'm going to ask you before you ask me. After you ask me, right? The reason why I'll be asking you, I want to see whether you were following these videos or you just want to ask. So please, before you ask me, go to my YouTube, subscribe, like, comment, and follow, right? Then you watch the video, you understand the video. Then after that, if you have any question, then come to my inbox. Right. Thank you very much. So we are going to